Dinshaw Irani joins us now. Let's connect with him. When markets go up, he is smiling. When markets go down, he smiles. When markets do nothing, he smiles.
Helps a lot.
But
Helps a
when
lot
markets
to
are shut,
cut
what do you
down.
do?
I still
That's the
smile. I
point.
still
You
smile.
still smile. Nobody's smiling like you after this recent correction. Everybody's
No,
crying
no,
on
no.
the street. Let's be clear.
I think there was an opportunity to buy actually, so that's why I'm smiling.
Have you started buying already? I mean, you've been talking about this correction. You said, look, things are getting dangerous. Mid cap had become
Right.
Humpty Dumpty. Uh, are things looking good now? Is it time to buy the fear?
So, Nikunj, actually, it's not about, by the way, a very good morning to you and your viewers, and always a pleasure to be on your show. So, Nikunj, it's not about, I see, we still believe that there's a lot of froth in the small cap and certain pockets of mid cap, right? Besides that, I mean, if you look at the overall market cap of the NSE 500, which is probably 95% of the market as such in terms of market cap, we've done analysis. So if you look at the two-thirds of that market cap, it still quotes at P's of 19 and a half times forward earnings, which is a fairly decent P to be on. I mean, if you look at the last 15 years averages, we are at 19. So we are nowhere there. So I don't think the large caps really participated in this whole rally. It was mainly the small and mid. Actually, if you look at the last 3 years average CAGR for NSE Nifty 50, it's around 13 odd percent, which is nothing. I mean, it's not even repeating what it did in the last 25 years, which is around 15-16%. So we're quite happy with the large cap portion and obviously very selective in the mid cap space. Obviously, we are avoiding the small caps as of now.
The store of value is large cap, but large cap is also where earnings are not great. Nestle, Bajaj Auto, Kotak Mahindra Bank, Infosys. So why large cap when they are also falling under pressure?
The Infosys was not as bad as the rest of the ones which you mentioned, but anyway, it was the better of the lot within these. So, as we have always said, Nikunj, that we don't like high PE companies with low growths in earnings. I think exactly that is what happened with the likes of the FMCG pack, right? We were never comfortable with those. So that's why I said that there are certain pockets within that also which are fairly overvalued, and these are some of them. Obviously, a few names that you other mentioned, we don't own them. We like Infosys though, and we own Infosys. But besides that, look at the IT pack. I mean, overall, I don't think it was a problem, right? Basically, what are you talking about? We're talking about reasonable valuations, mid teens kind of growths in the IT pack, which is quite okay for us. Even in the financial services, I think I was actually expecting you to ask me about HDFC Bank because now one can make out how strong a franchise that was. I mean, looking at the other bank results, you can really now take your hats off to to HDFC Bank, saying that look, this guy is he was always concentrating on his quality of assets, and that is what played out for him totally. And that's why HDFC Bank is doing what it is right now against the whole pack. So these are the kind of names that we are always looking out for. And I think we are fairly comfortable with the kind of large caps we have in our portfolio.
Okay. Uh, what could be the out of jail card or turning point for this market? Could it be earnings? Could it be festival demand? Could it be global technical setup of flows, China versus India? What would be the out of jail card?
So basically, I don't think earnings. So this quarter, by the way, we've been calling this out. I mean, you can go back and check our Sameer and me both. We've been calling out that March was bad, the June quarter was worse, and I think September would be probably the worst quarter, which is coming about. But frankly, I mean, I believe that December, because the base for December now turns lower, because last December was the one when the real downturn in demand started. So that base itself becomes very attractive when you come to the December quarter. So maybe that is I won't say get out of the jail card, but that will be one of the factors that is the turning point there. Having said that, FI selling, yeah, obviously that's creating a lot of pressure on the market in terms of the supply. But I don't think that FI selling is because of what's happening in China. Actually, China's seen larger selling this month than India has. India has seen from some 9.5, 10 odd billion dollars of selling month to date. China's around 12. I mean, last I checked on Bloomberg, it was 12. Yesterday's number I'm talking about till day before's rather number. So it's obvious that the FIs are, I think they're basically playing a Trump trade probably in the US. So they're going back, the money's going back to the US. So I don't think that's a issue. And anyway, that'll reverse because if India is going to grow its GDP at what, 10.5, 11 odd percent, nominal GDP I'm talking about, obviously earlier it didn't matter because we've been doing that on a regular basis. Earlier it didn't matter because we didn't have the scale. Now with the being the we'll probably be the third largest very shortly in the next 3-4 years. So if that happens, I mean, there's no way they can ignore us. So I don't think that that outflow will continue for a while. I mean, I think it's going to reverse back pretty shortly.
Happens shortly or not, Dinshaw definitely can't ignore us. That's the word coming in. But what's the view on FMCG and consumption? And consumption at the, not only the bottom level, but even the mid level. Urban is a different ballgame altogether. But if you look at the two-wheeler sales, if you look at what the FMCG companies are saying, it looks like even urban demand is slowing down and rural hasn't picked up.
I agree totally with this statement because that's what we had called out also. I mean, when I think when some of the FMCG companies came and said, look, rural is picking up. We happened to go through the Nielsen report, AC Nielsen report, and we realized that at the grassroots there was no pickup. I believe that maybe just talking at the dealer level or something that made them believe that there were green shoots happening. So frankly, I mean, we were not too keen on the rural segment anyways. As I said, that rural segment doesn't move the ticker anyways because they are more of premiumization into FMCG. But it's the urban which is a concern today because urban has started taking a tank. In fact, you can make out why two-wheelers. You can make out from the PV sales, which are really up for, I mean, as in there's nothing happening there, right? I mean, there's an inventory level of around 1.5, 2 months or building up at the dealer level. So that's where the concern is. But I don't see that to be a big issue because I think it's more of a move from the RBI to suck out the liquidity from the system and making credit much more the consumer credit much more difficult. Once RBI starts, which I believe will be in the first half of next calendar year, infusing liquidity, cutting rates. I think that pickup should happen in the discretionary space too. So maybe it's a wait and watch there. But frankly, I mean, we're not too keen on that sector today. But that will be a mover for the market.
Yeah, mover for the market, not too keen right now. But are you keen on pharma at all? And which, end of pharma? Is it hospitals, diagnostic, domestic-facing companies, CDMO players, export players? Where is that you are finding value and comfort right now?
So basically, it's kitchen sinking out there. I mean, the way you stated. So no, we are very keen on obviously hospitals. We've got a couple of players there that we like, and that's more of a call on the per capita is moving up in our country, and obviously health becoming a bigger spend. That's what one saw in China or any other economy which was picking up as such. So that's one call that we've taken. We like the CDMO space, no doubt about that. And that's why we have only one player out there, which is probably one of the best players within that space as such. And obviously, the US facing pharma, I think if you take a Trump call, there's definitely going to be a pressure going forward as such. So that's why we don't like the US focused pharma companies much. And we don't have any much exposure, and rather no exposure there as such. We more focus on to domestic pharma. In the diagnostic space, we got the best player, the top player with us.
Dinshaw, with every 2-3 quarters, the leadership in the market changes. What does well this year rarely does well for 2 or 3 years more. So what do you think is unlikely to be a market performer next year from this Diwali to next Diwali? And what do you think could be a market outperformer?
So I'll tell you, the easier one is the calling out the outperformer. I think financial services will definitely be outperformer. I mean, the banking space itself, which has been a real laggard all these while. I mean, after COVID, I don't think the banking space has done much as such. I think that should see a pickup, especially after RBI starts infusing some liquidity into the system. I mean, obviously, the deposit raising will become easier. Obviously, there'll be a lot of demand from the consumers and stuff like that. So that's why that space, and plus, secondly, the wealth managers, the exchanges, I think these are exciting spaces to be in. So these may be the leaders of the pack going forward. Obviously, IT is another one that we are very keen on. I think that will be another leader going forward because as things start improving. By the way, the call is that there's only going to be a soft landing in the US. If anything, it's going to be a steady pace that US is growing at. And the strength of the economy has been phenomenal as such. So I believe that IT should continue its mid-teen kind of growth going forward. So that's why we are very keen on that. In the consumption space, again, I think there are pockets where you can look at, like tourism is definitely going to be a big one. I don't think India has got any quality rooms, and given the fact that the Indian tourism itself is picking up. In fact, the recent article that I read up was that we're going to replace the Chinese in the next couple of years as the largest tourist base moving around in the world as such. So I'm sure the domestic tourism also will pick up in a big way. And yeah, and within that, we like the platform companies in the consumer space. So these are the kind of leaders that one can look for. Obviously, the laggards, the shift will obviously move away from autos. I don't think the auto space it's done phenomenally well in the last couple of years as such, but I don't think that's going to be the leader going forward, given that the domestic demand is not that great, and obviously the fact that there's a lot of competition which will come in via EVs. Our call is that the next couple of years you'll get an EV cheaper than an ICE, so it's best to stay away from autos as such. So.
Stay away from autos. Before I let you go, I want to talk about another, disruption and competition which is heating up. And no, it's not quick commerce because we have talked about it often. I'm talking about the beverage industry, and I understand you have exposure to Varun Beverages there. A lot of companies, including Tata Consumer, has gone on record talking about the threat coming in from Campa-Cola. There is that, headlines doing round how Pepsi and Coca-Cola are now looking at battling this away as well. What's your take? How's that going to impact the industry? Because you do have exposure to Varun Beverages. Help me understand what's the thematic on that one.
So basically, there's a price war going on out there, right? I mean, by the way, we did a blind test in our office of some 30, 40 people that we have in our office. And Campa didn't come out too high on their rating. They found it too sugary. Some found it too sweet. Some found it too fizzy and stuff like that. But anyway, I'm not even going there. So what I think the counter that Pepsi and Coke are doing is they're coming out with budget. They're not letting their master brand getting hit. They're coming out with some budget drinks to counter Campa-Cola as such. So I believe that is what's going to work out. Frankly, I mean, the market is too huge for this. There's always room for one more player to come in as such. But yeah, it'll be an interesting space. Though Varun Beverages, coming to that specifically, I don't think it's a domestic story anymore. It's more of a growth of Pepsi globally. And I think what Pepsi has taken a call on Varun is that he's a master at capturing market shares when he goes into newer markets. And that's why all along they've been offering him newer and newer markets internationally. I think that's where the excitement comes from.
On that note, we'll let you go. Thanks so much for making time and speaking with us today. So maybe
Thank you.
anecdotally, Campa-Cola is not picking up, but at least